You're tuned in to Agriculture Today, and we start our Friday show talking about the grain market both domestically and internationally. And then to talk about it, we're joined by K State grain economist Dan O'Brien and the senior economist at the IGP Institute here at K State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Sure. Thanks for having us.
Dan, kicking off our conversation, looking at the Kansas markets for wheat.
Well, there's been a lot happening last week, and of course that's brought us to where we're at in the grain futures. From where we were on Friday of last week when the USDA came out with their reports, we've seen some movement in the futures markets. Some in some of these commodities, a little bit of narrowing in basis on the feed grains. Some Guy and I later on talk about some underlying factors on that. And then, of course, the Kansas Wheat Tour has happened this week. New information to come on. I think Guy's going to lead out on that. So when you look at where markets closed on Thursday, yesterday, July corn 457 is down 5 cents, but really we've been trading around. Again, in the last few days, we again, about a week ago, we were about 457, 455. We traded up to about just about 470 or so at the very, very top. Now back down, closed again at that 457. If anything, we're watching new crop bids as much as anything. So D's corn closed yesterday at 481, had gotten up to 49 into the 490s. In the last several days, but traded back down again, following from report issues. November soybeans traded now down below $12 to $11.99. Had been a bit higher than that in this last week. July actually closed a little bit higher at 12.16 and a quarter, up 2 cents. Again, whereas November was down 2. So, and really July wheat has been more volatile this week, mainly with news that anticipation was going to come out of the Kansas Wheat Tour and international factors. So we had seen the July contract, the harvest contract for Kansas City hard red winter wheat, or Kansas hard red winter wheat, traded on the CME now at 673 and a quarter, down 1 3/4 cents yesterday. And generally pretty strong carry in those markets, 6-7 cents all the way out to March of 2025. And that's a market that if you have carry like that, you generally you see the incentive being given to store, hold on to it. At least that's how we normally interpret it, that type of positive carry in the markets. Would say in the cash markets, we still see ethanol plant bids for Kansas for corn at about 498 and a half, just under 5. And the next highest state comes in with Nebraska at about 470. And in Iowa, they're 463, 461, less than that everywhere else. So our Western Corn Belt location is giving us better bids. There's transportation issues, some scarcity of supply issues that could come into play. Speaking of scarcity of supply, we've seen on some of these Kansas locations for corn, the cash bids move a bit higher. So now we're up to at the elevators a bid of 30 over for corn. That's the top bid in Southwest Kansas at 487. Also positive. 11 over in Colby, and we had been even or a little bit below that in over the last month or so. Even in some other areas, weakest actually in Salina and Hutchinson, right through the central part of the state. Grain sorghum bids all really for most of the state looking pretty strong. Cash bids 20 over at 477 at Salina. Export bid area, that's really leading the state. Soybean bids really pretty variable. The strongest bid by far in Topeka, in the eastern part of the state, at 2,500. Everything else at least 75, 65, 75 under or less. And then, of course, with impending in July wheat harvest, and it's having come out of the Kansas wheat tour, we're seeing a cash. Well, we have cash bids at about 623, 658 thereabouts, but new crop bids are over $6, but the strongest of them is 643 in Topeka, 638 Salina, 638 in Hutchinson, 623, 613 thereabouts elsewhere around the state. So we do have $6 bids for cash, but cost of production, depending on really if there's a fallow period involved farther out to the west or not, we're covering direct cost of production for sure, but I guess the total amount of cost that goes into the land side is really a determinant, as well as the coverage of fallow, where we have some non-cropped acres that determine what that final cost of production is. So at these prices, we're surely covering direct costs in the western part of the state, but are probably struggling to cover total economic costs in those more fallow prone areas.
And Guy, can you share with us a little bit about some of those numbers that came from the Kansas Wheat Tour?
Yeah, here this afternoon, the Kansas Wheat Tour concluded their 3-day tour after visiting 449 fields across the state. And they came together to put some final numbers on their estimates, which were quite optimistic. They came in at 46.5 bushels per acre. That came in at about 290, just over 290 million bushels of wheat. That's a 55% increase from last year. Just to compare that to last week's USDA numbers, on May 1st, they had Kansas wheat crop forecasted at 268 million bushels. So they came in, just over 20 million, 22 million bushels, a bit better than the USDA numbers. So USDA number was up 33% from last year. So in a few more weeks, we'll kind of see how that comes to town. It's good to see the crop in better conditions than it has been the last few years. Now the challenge is going to be to find some markets, particularly export markets for this wheat. So go ahead, Dan.
And on that, on the wheat tour, I think the first day was about a 49.5 bushel average, and they were more northern Kansas, then swung through the tougher part of the state down southwest and over into south central second day. And I think the average there was either 42 or 44 bushels. So they ended up at 46. So that what they had seen the last day must have ended up somewhere about in the middle by the time they brought all that together. And it's sure a lot better situation but it just depends where you're at in the state. There's a lot of spotty fields, some rough looking fields that didn't happen to catch moisture. As you go down the Garden City area, you drive right by them. They've turned brown. So although the overall average is a little bit better, there's still quite a few people that depending on where they were at in the state, if they happen to catch rain or not, that things still look pretty rough for them.
And Guy, what are we?
Go ahead.
What are we seeing on the international side of things for wheat?
Yeah, so turning to international things, it's a bit mixed. Interesting, USDA had expected Russia to produce an above average crop this year. It would be potentially their third consecutive record wheat crop. However, we have seen some fairly cold, unseasonably frost and cold weather come through a number of their growing areas. So it's put a big question on that. The thing I'm always a bit cautious of, and a good number of years ago, we had a late May cold snap in Kansas, and they ended up having a record hard red winter wheat crop. So wheat's pretty resilient, but we'll see how that turns out. And Russia and that Black Sea area is pretty key, one of our strongest export competitors. Looking at China, their USDA forecast came in at about a record 140 million metric tons this year, which is a new high for China. They have received some fairly good growing conditions across most of that country this year. Just to our immediate north, Canada's production it was up 6% to 34 million metric tons. Conditions up there not too dissimilar from Kansas and western Kansas, with the bit more optimistic on their production. And then India is expecting record levels of wheat production this year at 114 million metric tons. That's up 3%. And you look at China and India, they're the two biggest wheat producers in the world. So I think India had gotten their ending stocks down this year to historically fairly tight levels. So they needed a bit of an increase there, but it's sort of going to throw a damper on our export potential to China particularly. But I think remain a bit optimistic. The Russians and the Aussies won't be quite so hard to compete against this coming year.
And I would add in that if you look at the rate, the pace of U.S. wheat exports, we're still trailing, well, in this marketing year, with about 3 full weeks left, in essence, kind of aiming for the June report, and the marketing year ending May 31st. We're trailing some guy. I would not be surprised that unless we come through at the end and we add a whole bunch of other wheat products on a equivalent basis back into that wheat number, that will probably end up with a little lower wheat export. We could very well end up with lower wheat exports on the USDA domestic supply demand balance sheet, and add a little bit more to the ending stocks for this 23-24 marketing year, making things look that much rougher in terms of beginning stocks for the supply demand balances.
Yeah.
So I would just add in again, we came out of that May report. We have these issues we're wrestling with. Still, the overall world wheat supply demand numbers, stocks to use, percent stocks to use for the world, with China included, 31.6%, haven't been below 30. Well, we haven't been that low since about 2007, 2008, and we're down below 20% stocks to use, 18.6% for projected for the next year. So projected to tighten up even more. So Shelby, it's the same conundrum we've had. Gosh, we see these situations kind of poor for U.S. wheat exports, but gracious, we're getting tighter and tighter and tighter when it comes to world wheat balances, and someday the collision of these different forces will lead to some volatility in prices.
Dan, did you have the numbers there for the major exporters, less China, or the major exporters? Because that's a fairly tight number, I think, coming at the end of this year.
I don't have it quantified, but yes. Well, that's right. Major exporters like minus China show about the same situation as the world minus China, really, in terms of just tight.
Yes.
We're cutting to a short break now on Agriculture Today, but stick around, because once we come back from the break, we'll once again be joined by Dan O'Brien and Guy Allen as we continue our domestic and international grain market conversation.